And we shall go live in 3, 2, 1. Well, here we are and we are live. Hello everyone, my name is Jeevika and I welcome you all to today's Facebook Live. Today's topic is value session is top 5 investment themes of 2021. We all know 2020 was a dramatic roller coaster ride for economies, businesses and market players. Markets witnessed unprecedented highs and lows within a span of few months. While apologies. While predicting the future is a risky game, the experience will definitely turn out to be a lesson for such unprecedented crises in future. In 2020, many trends emerged, carving the way for potential investment themes for 2021 that are impossible to ignore. These trends could impact investments this year and affect the share market. We have with us Mr. Kunal Sahani, founder and CEO of Kalkine Group, with us here over to share all views from top 5 investment themes of 2021 and discuss how market players can tap burgeoning prospects in these themes. Kunal.
Thank you, Jeevika. Thank you very much. Well, indices, Jeevika, across the globe dropped substantially during March 2020. Market dip, panic selling, economic uncertainty, and lockdown restrictions drove markets to an all-time low. Interestingly, markets slowly recovered with fiscal support, monetary initiatives, and gradual opening of businesses. Overall, healthcare, technology, and BNPL emerged as pandemic winners, while other themes such as retail, travel, and hospitality were hammered. The US then won a contested presidential election amid a full-blown global pandemic, which drove markets across the world, while Bitcoin mania and emerging trends in commodity space grabbed the headlines by the end of 2021. Nobody could successfully predict the fall and rise of the markets, that's for sure. If 2020 showcases it's that the market is unpredictable and it's better we not even try to time the market movements. So, timing the market movements is a big thing. So very hard to do that. But what we can do is study what we have in our hands and analyze the trends that are charting the course of 2021. Smart investments in emerging themes shall help the market players to reap considerable returns.
Thank you so much, Kunal. Audience, please feel free to ask your queries in the comment section. We would be happy to take them on the show. And before we start, I want to put a disclaimer. Any advice in this video is general in nature and does not take into consideration your personal objectives, financial situation, or needs. So Kunal, which theme would you like to discuss first?
Jeevika, let's start with the energy space. Brent crude oil prices have been climbing up the ladder on the back of several factors, such as production cut by OPEC members, the extreme cold weather conditions across Texas, one of the largest oil-producing regions across North America, resulting in supply disruption. Just last week, Brent futures jumped to a fresh 52-week high, nearing $65, which was last seen at the beginning of 2020. We saw the oil traders responding well amid declining production and depleting oil stockpiles across United States. Looking at demand side scenario, economic opening and demand revival seems to be providing support to oil prices. In fact, world crude oil demand for 2021 is forecasted to be 5.9 MB higher than the last year, according to OPEC data. So I believe energy space has a bright outlook in 2021 from investment standpoint, but few minor corrections need to be carefully observed on the charts as witnessed last week. Last week, Australian's energy sub-index fell as much as 2.5%, marking its biggest intraday percentage loss since Feb 1. Oil prices slid overnight on profit taking after days of buying sparked by cold snap in Texas. Industry heavyweight Woodside Petroleum WPL dropped as much as 4.5% to mark its its biggest intraday percentage loss since September 30, extending losses into a second session after the oil and gas majors' financial year profit missed expectations on Thursday. Santos, Oil Search both slid by 2.6% on Friday. So, energy space looks quite interesting right now.
Well, right, Kunal. Could you also take us through some stocks in the energy sector?
Absolutely. If we can come closer to home and see this trend in the last 6 months, many ASX listed oil and gas stocks have regained the lost ground. These stocks please shareholders with some healthy price gains, overall returns. Over the last 3 months, ASX 200 energy index has recovered 15%. This definitely propelled the market sentiment around ASX listed oil and gas stocks. So some of the ASX listed stocks such as Woodside Petroleum, Oil Search, Beach Energy have posted strong price gains and returns. Most importantly, the 10-month recovery in crude oil prices has improved the medium-term performance of several ASX listed oil and gas stocks. Many players have even surpassed the total return of ASX 200 energy index over the past 6 months.
Okay, all right, Kunal. Let us move on to our next theme now that market players may evaluate in 2021 from investment standpoint. Which is next?
Let's talk about Bitcoin, which is on everyone's mind. Cryptocurrencies have evolved and progressed into extraordinary means of investment in the last couple of years with the popularity of Bitcoin, Litecoin, Ethereum, Tron, and internet's latest favorite, Dogecoin or Dogecoin. Everyone is suddenly taking about the virtual currency. It is believed that if you own cryptocurrencies, then you are a part of the future economy. Well, we don't know about the future, but Bitcoin and cryptocurrencies are definitely one of the hottest spaces right now, especially when many big companies are taking interest in it and backing crypto, such as Tesla, Apple, Bank of New York Mellon. The initial doubts surrounding cryptocurrencies have long gone with the rapid developments in digital payment landscape. For instance, PayPal has started accepting Bitcoin and other few cryptocurrencies as a payment option across its 26 million merchants. Very recently, MasterCard has also started to prepare to bring crypto into its network. In Australia, cryptocurrency adoption is rising as more and more people are getting aware of this trending virtual currency. According to a recent survey carried out by the Australian crypto exchange, 18.4% of Australians own at least some cryptocurrency, such as Bitcoin. And also CEO of JP Morgan, Jamie Dimon, has commented harshly on digital currency. He initially called Bitcoin a fraud. And in just 2 years, JP Morgan Chase became the first bank in the United States to test its own digital currency. Such is the journey of crypto. Therefore, companies directly or indirectly engaged in cryptocurrency space should definitely be on investors' radar.
Well, that was quite an information, Kunal. Also, can we explore some ASX listed stocks with exposure to cryptocurrencies?
Yeah, well, in November 2020, the Reserve Bank of Australia announced its collaboration with other banks and a technology company to explore the use and implications of central bank digital currency, CBDC. So in the near future, it will be interesting to see how the businesses and financial institutions in Australia accept and adapt to digital currencies. While we are now talking about Tesla or PayPal to back the virtual monies, we also have some ASX listed companies which have been in the game for a while. Raise Investment, RZI, provides financial services and products through its micro investing platform. One of Raise's investment options is its Sapphire portfolio, which includes a 5% target allocation to Bitcoin. Then we also have Digital X, DCC. It is a technology and investment company specializing in blockchain application development and digital asset management services. The company currently offers 2 cryptocurrency investment products, the Digital X Bitcoin Fund and the 𝐷igitalX Digital Asset Fund. 𝐷igitalX promotes its 7-year track record of managing Bitcoin investments and other digital assets. Besides that, we also have Fatfish Group, FFG, a tech venture with investments in Australasia and Europe, has Bitcoin exposure via its Sweden-based subsidiary, 𝐊𝐴𝐵𝐿𝐾 Investment Group.
All right, Kunal. I think I have been thinking of adding some cryptocurrencies in my digital wallet. After this show, I'm definitely going to connect with you. I hope you'll guide me through it. Now, let's move on to the next investment theme that you want to pick from your platter. Which one would that be?
The next theme we can touch upon is healthcare, placed at the center of global virus crisis. Definitely, global COVID-19 vaccines rollout is likely to boost pharmaceutical stocks. We saw last year how companies in the race of making COVID-19 vaccines performed tremendously well in stock markets. Looking at latest vaccine developments on a homeland, Australia has commenced its vaccine rollout with COVID-19 vaccine developed by Pfizer and BioNTech. The authorities anticipate completing the vaccination drive by the end of October 2021, and we may roll out the Oxford AstraZeneca COVID-19 vaccine in early March. Pfizer and BioNTech got another shot in the arm in January 2021 as their vaccine candidates also found to demonstrate protective activity against the new variants of SARS-CoV-2 virus and is easily adaptable. Moderna Inc. is another company working to respond on the ongoing global health emergency. Moderna's COVID-19 vaccine, RNA-1273, has been found to be 94% effective against the coronavirus. Then there is the British pharmaceutical giant AstraZeneca, AZN. It has been working with Oxford University researchers to develop COVID-19 vaccine. AstraZeneca signed several distribution agreements across multiple countries to provide COVID-19. American healthcare company Johnson & Johnson, J&J, Janssen Biotech Inc. is also developing its COVID-19 vaccine by using AdVac vaccine platform. Besides, American vaccine development company Novavax is also developing a protein-based COVID-19 vaccine candidate as well. All these global stocks have benefited amid the vaccine development news in 2020. So I believe the pharmaceutical industry, if they manage their programs well to control COVID-19, it will be a triumph for science, and companies involved in the efforts will be immensely benefiting for the companies themselves and vaccine makers like Pfizer, Moderna, but also company working on therapeutic drugs like Regeneron is one of them, will benefit too. Also, companies involved in logistics or storage are also an advantage. Some vaccines require well below freezing transport. So companies that sell cooling technology are also likely to be rewarded in this situation.
All right, Kunal. Before we move ahead, would request the audience to ask questions, if any. We have Kunal with us to answer them to you right here. So, Kunal, which theme would you like to suggest the audience to explore in 2021?
Banking space is a good one to look at. There's a rebound in 2021 while the economy is also heading towards revival. So investors can take a note of this as they are emerging relatively well from aftermath of the COVID-19 pandemic. It seems like value investors have begun their vigorous scan for banking stocks on ASX. Also, banking sector prospects seem to be boosted by an increase in borrowings and improvement in incomes and employment scenario, but the ongoing record low interest rate continues to squeeze the bank's profitability margin. So while there are some headwinds, overall the sectoral prospects look promising. Jivika, for many years, Australian banking players have enjoyed high popularity for their dividend yields, both the international and domestic income seekers, especially retirees. But last year, amid crisis, investors' trust in banking stocks went into a tailspin. The year was so dramatic, and we saw most banks slashing or deferring their dividend payments. But it seems that the banking stocks are back in the game, with the Australian Prudential Regulation Authority, APRA, uncapping the dividend dividend payment. And Australia's big four bank stocks are under the spotlight in 2021, while the market has expectations for a strong return and dividend resurgence. In fact, recently Commonwealth Bank of Australia announced a $1.50 dividend per share for the first half 21, up by 53% from the second half of the financial year 20. So investors are cheering for the long withstanding stocks to get back on the feet and start performing again.
That's great, Kunal. Definitely, that's a great sign of relief for the income seekers, while ongoing reporting season is definitely closely eyed. Now, Kunal, which is the last theme that are you touching upon for our viewers?
BNPL looks like a good one to talk about. The new year 2021 could prove to be overwhelming for the buy now, pay later industry. This segment has assisted consumers and merchants amid the e-commerce frenzy during COVID-19. It is important to note that 2020 was not all bad. It kickstarted many developments that the world might later be thankful to. Also, technological integration remained the critical highlight during the pandemic. So we expect BNPL players to continue to flourish on the pandemic-induced growth momentum. In such a positive environment, we also have big concern over the fintech space. Recently, BNPL regulator noted that late payment of fees is one of the critical issues affecting a significant portion of BNPL consumers. ASIC's review of BNPL sector undertaken during November 2020 indicated young consumers most affected by the payment arrangements. So it is a bit of serious concern looming over the BNPL segments. Having said that, specific BNPL stock deserve closer attention. Afterpay is a one which has done really well, significant rise in customers revenue, but also posted huge returns last year. 2021 is proving no different, with the stock making fresh highs, and investors are now closely waiting for its earnings release. 𝐷𝐞 is another one. For the quarter ended 31st December, Zip's revenue was up 88% year on year to 102 million, while its quarterly transaction volume edged up over 100% from the previous corresponding period. So Jeevika, these are huge numbers.
Wow, thank you so much, Kunal, for providing valuable insights on top 5 investment themes for our viewers and taking questions. We did not have any, but we will, if there are any questions, we will definitely take them up and answer them. And thank you so much, everyone, for attending this session. We are sure you all found this show interesting. Now it's time to say goodbye. But before we sign off, please like, share, and comment on this video and stay connected with us on Facebook, YouTube, Instagram, and Twitter. Next week, we will come up with another exciting live show. If you have any queries, get in touch with us on info@kalkinemedia.com and we will definitely get back to you. You can also visit our media website, that is www.kalkinemedia.com.au, and equity research website, that is www.kalkine.com. Thank you, everyone. Bye and stay safe. Bye,
Thanks,
Kunal. Thank you
Jeevika.
so
Thank you very
much.
much.
Thank you.